Hello, everyone. Welcome back to the How to Trade Switch Markets community. I'm Shane Vernier, and this is the week ahead. Today, we're going to preview the week that's coming our way on the financial markets. We're also going to take a good look at a few trade ideas that have come across the board that have panned out very well. We traded the euro very well late last week. We also had a winner in U.S. oil. Probably not going to cover that one today, but maybe tomorrow. But that was an absolutely fantastic trade for Friday. So we got a great sell in U.S. oil from right up around 66.60. And then we also had really a huge trade in the euro Great Britain pound. And a lot of it had to do with the trade deal that was announced yesterday. We're going to talk a little bit about that. I wrote up a new trade idea today for the euro US dollar from a 13-week moving average that is coming into play relatively quickly. I really like it, but the euro USD really is the big loser today. If you want to go right out to price action here, you can see exactly what I'm talking about. I mean, it's just an absolutely epic dump. And when we talk about epic dumps, that's an epic dump. That's an absolute plunge. Typically, what we see in the forex is not really what we see today out of the euro USD. I mean, it is truly a rotational market. Typically, we see trends like this develop on the daily time frame, but intraday time frames are really difficult with the euro USD. They can be problematic in a lot of ways. Today is just an absolute crash. An absolute crash. So I want to welcome everybody back for week 31. This is the week ahead. We're going to go ahead and preview a huge week in the markets. We've got FOMC live on Wednesday. We've got NFP live on Friday. So I'm going to be in front of the camera an awful lot here, giving you trade ideas and analysis. Really going to break all of it down for you and give you some key levels and some markets to look at, and maybe even some fundamentals. Today, a huge tariff news, huge EU-US news going. I mean, it's day 58, it seems, of the Epstein scandal. I mean, just huge news breaking all over the place. There's been a new deadline by Trump just issued against Russia, 12-day deadline to go ahead and sign a peace deal with Ukraine. I mean, absolutely huge news cycles, and it seems like every single day there's just more and more and more and more, and it can make it very difficult for us to be traders. There was some action in the US 30 today. I'm going to cover great big bullish open. Immediate sellers came in. We are in the dog days of summer. We're seeing whipsaw action across the markets, and it makes it very, very difficult for us to actually pick a correct side. But we've just got to be diligent, stick to our strategies, stick to our discipline, and we're going to be just fine. So I want to welcome everybody back. Yes, sir. Good to see you. Yes, sir. Welcome. Lewis Shepard. Good to see you, Lewis. Bobby Bob. Let's see. Hi, Coach Shane. New week, new opportunities. Today gives us how to trade WTI. Yeah, I'm going to go ahead. I'll pull up U.S. oil. We had just a banger trade there that came across Friday, so I'll go ahead and look at U.S. oil. Big week for oil. It's going to be, we're getting into the area where we need to start transitioning into fall seasonality. And if we don't do that, you're going to see higher for longer in WTI crude. I still have a bearish bias here. I believe there's a big washout coming, a big wipeout coming, but I don't necessarily know when it's going to be. I think it's probably going to be in the next 3 weeks, though. If I had to guess, it would be probably mid to late August. And before you really get those sellers stepping in and selling in front of fall and winter seasonality. So we absolutely will. Great Britain pound USD. Yeah, we're going to cover gold as well. Gold is going to be our pick of the weeks coming out in the Switch Markets newsletter. That's going to be in your inbox if you're a Switch Markets client. That's going to be in your inbox probably, I don't know, T-minus 18 hours or so. You'll have it for the Tuesday U.S. session, that's for sure. Dave F19, good to see you, Dave. My apologies. Extremely dry here in Dillon, Montana. Did a little cross training outside over the weekend. We're at about 5,300 feet above sea level, so it's very, very dry. I was talking to a gentleman yesterday that was going hiking up at 8,300 and was laughing at me. He said, "I'm having trouble getting wind at 5,300." He said, "Hey, you got to try it at 8,300." So definitely a lot going on there. So this is the week ahead. So the idea behind this stream is to get you set, locked, and loaded, and ready to trade as we roll into the Tuesday, Wednesday, Thursday session. So welcome to the Switch Markets community, everybody. Really a lot of new names, a lot of great engagement from traders out there that I haven't really met, don't really know, but a lot of new faces and a lot of new names, and that's fantastic. That's exactly what we want here. All right, here's a trade update. Number one, durable goods disappoints. Euro Great Britain pound in play. This was a trade that we took some heat on. No two ways about it. We took some heat on, but it was a winner. It was an absolute winner. You can see right there we've got our key levels and also our next level. We almost got stopped out on this one, but that's sometimes the beauty of trading in just a hyper volatile environment. When you get in there and you get these trades, they're pretty good. Remember, we had 2025's high right there at 87.38. We were looking to get short right there from 87.30-ish. You see there's your high. Your Friday's high was about 87.43. Today, you sort of gapped open a little bit higher, 87.57, which wasn't quite to where we were going to get stopped out at. And then you got your reversal. That reversal is an absolute beautiful thing. So that one was good for a fast, 50 ticks, or 50 pips, 55 pips. Really a good trade. Dicey. risky, of course, but there was what we had going here was a situation where you had that big trade deal announced yesterday, U.S.-UK trade deal. And it's something that we can recap if you want. I read some of the details of it, or U.S.-EU trade deal. I read some of the details of it. I didn't really have anything prepped for you because it's not necessarily, it's a deal, but these deals are only as good as the folks involved in a meeting if they're going to be honored. And I don't know that any of these things are going to be honored, but we're going to talk about it in just a second. But that's what drove the incredible volatility to the euro. Now, we knew that there was going to be some fireworks. We knew there was going to be some fireworks on the EU-US front, and we knew it because Trump was going to Scotland, visit his golf course in Scotland there. Looked like a nice enough place. I don't know. He was mad about the windmills being off the coast there. Ahmed, good to see you. Ahmed, Steve Francis. Always a pleasure, Steve. So the EU-US trade deal, what really was it? I'm going to spare you the details because there's three basic tenets of this that you need to know, and everybody's just sort of yelling at each other now, and this deal sucks or this deal's great, biggest deal of all time, whatever. Essentially what happened was Trump was going to go 30% tariffs. He cut those to 15, which, we'll see just how long those actually stay in play as well. And then there was also there was a pledge from the EU to buy it was either $750 billion in energy assets from the United States, which is going to be what? It's going to be LNG. It's liquefied natural gas, specifically. Those LNG exports from the United States to the European Union, those indirectly are going to put pressure on the Russian market. They're going to say, hey, listen, I mean, this is part of Trump's twofold plan here, saying, listen, you need to sign a peace deal or else we're going to subsidize Europe with their natural gas, and that's really going to cut the legs out of a large portion of the Russian economy. That's economic warfare right there. So that was part of it. That was part of that deal. $750 billion in U.S. energy exports. Okay, that's great. Now, the second facet of it was $600 billion, an additional $600 billion in foreign direct investment in U.S. assets. We don't know what that means. I don't know what that means. I don't know if it's in infrastructure. I don't know if it's a port revamp or if it's in the stock market or bond market. I don't know. They're never going to tell you exactly where that's going to go. But the deal is this. It's supposed to move markets, and that's exactly what it did. Now, it didn't move U.S. stock markets. U.S. stock markets sort of took it on the chin a little bit since a bullish open, but this right here, Euro, Great Britain, Pound, absolutely fantastic stuff right there, and really a nice big sell-off from our key level, which was 2025's high. Not bad. We took a bit of a draw there. Bit of a draw was about, 21 pips, somewhere in there, 19 pips. But after that, bang, came off in a big, big way, and you got to love that. You got to love that. So the volatility definitely played to our favor there, and that's an interesting type of a dynamic. Now, here's another one. This was a Euro USD. Now, this one came across the board on Friday, and it was a pretty doggone good trade. I'm going to go ahead and show you this one in a second, and then we're going to go ahead and preview the next trade in the Euro. Right now, it's time to be trading the euro. It's on fire. This was the other trade update. We were looking to take bids from right around 117 or so. Clearly, we're trading way below that now here in the euro USD. You can see we plunged, but the way that we had this lined up really worked to our favor. The volatility really helped us. And you're like, Shane, what are you talking about? Well, the trade was real simple. It was from this spike low to this spike high, and you can see we've got that huge epic sweep, that epic sweep that's developing today after the trade deal. But what did we have? That's a beautiful thing right there. We came right down on Friday. Friday's low was what? Friday's low was 1 at 117.03, and then you got the bounce. The bounce was to what? 117.70. Cashed in right there in a pretty big way. That's a fantastic move. Boom. Nice, great entry. Nice revision, and then you get a little bit of a tick higher. That's a fantastic trade. Now the washout is on. The first thing that I was looking at earlier today to trade was going to be our 62% level on the daily, which is right around 116.50. Let's go down and see exactly what happened. Did we get any love there? It was a tight scalp. It wasn't the best trade in the world, but there it is. There it is back at about 5:30 a.m. my time, 7:30 a.m. Eastern. You're in the pocket right there with your entry somewhere right around 45, maybe 50, and your high. You just didn't get much of a bump against this vicious trend. 116.65. You got about 15 pips, and then the market came off in a big way, and it is still coming off. So the trade idea that we put out today was relatively straightforward. I sat around looking for Fibonacci retracements. I was like, there's a big monthly Fibonacci retracement way down the queue. We're not going to talk about that just yet, but I'm very confident, very, very confident in my 13-period EMAs. 13-week EMA here is liable to act as just absolutely robust downside support for this Euro USD. So this is one of those markets that I want to trade, and I want to trade it because it is moving. Now, I could pull a 4-hour chart, and we could try to sell retracements all day long. We're going to probably do that tomorrow because right now we're pushing daily lows. Right now we're beneath 116 even on the Euro USD. What I want Perfect world. You say, Shane, what do you want? What would make you happy on a Tuesday? I would say, well, opening Tuesday morning, I would love to buy my 115 area. I would love to do that. Early tomorrow, I would love it. Do I want to do it today? If we could get another 90 pips off, absolutely, we'll do it. We'll buy right into the teeth of this trend, and we won't even hesitate because the market will be overextended at this juncture. This action right here, though, pretty good stuff. So I love my 13-period EMA. We're right around 115.14. I believe we were buying 115 and a quarters in the trade idea, 115.25, 115.27. I'm more than happy to take a position from there. I don't mind bucking the trend because we're in what we call sort of the kill zone here. Not to be too graphic or anything, but the idea is very simple. This is a Monday session, a weekly chart, but we've only got one session, and we haven't even completed that yet. We are overextended for a weekly range already. Why? Because the news brought a big move. And now we've got to say, okay, how do I want to trade this? It's really too late to step up and sell today. It is. I mean, you can do it if you want. You could sell right now 115.98s and just bet that we're going to rotate south from the 116 level. I don't hate that trade. I really don't. It's just not really my style. I don't like selling the end of a daily range where we're already off over 1.25%. I don't want to get involved in that. What I want to do now is I want to take a look at that move. And I want to say, okay, is there anything else coming out that's going to bury us? No, not really. We've got a Fed decision that's coming our way Wednesday, all right? But we've got a pretty darn good chance here to grab this trade before then. If we trade off about another 70 pips, I think we're in business for the long. I like that trade a lot. Check out this today's trade idea, and that went out in the How to Trade trading room and to all the How to Trade customers via email. So I'm absolutely confident you guys may be watching that one relatively closely. I know that I would. Let me see, Ahmed. Yeah, absolutely. A couple other things we need to cover today. There's a lot we need to cover today. A little bit about psychology. I want to thank everybody that tuned in for Friday's session. We ran long. We just started talking about an hour on just psychology and what it is to be a trader and all the different pitfalls and troubles that we have. I want to thank everybody that joined that stream. That was a pretty good stream. I always enjoy doing those because I get to share a little bit about what my journey's been and how long it's sort of taken me to get established in the markets. And I didn't talk much about the ups and the downs financially for me personally. I also didn't really talk about sort of making the transition from being a trader to a financial writer to a live streamer and a trading coach. All of those things we'll cover at a later point in time. But what was important was having everybody understand that their psychology was very, very critical to their success. And I got several messages saying, thank you for the stream. It's good to know that some of the issues that I'm facing are some of the issues that you've faced and some of the issues that other folks are facing. Believe me, there's nothing new under the sun. There is nothing new under the sun. Everything's been done, guys. Everything's been done. Every problem that you're having in the market has been done 100 times over and 1,000 times over. All right, it's been done by rich folks, poor folks, smart folks, stupid folks, all of them. All walks of life. We all tend to make the same mistakes because we're all, at the end of the day, we're humans. We're human beings. Our brains are roughly constructed in the same fashion. Those hormones that I talked about all day, cortisol and dopamine, those are very, very real, and they're going to dictate your performance in the market. So that's something that we're going to get a little bit into more and more. I got really well-received live stream there, and a lot of folks really loved the psychology stuff. So I'm more than happy to talk psychology with anybody that wants to talk psychology. The trading game can be a big-time challenge. And for me, it's the old KISS. It's KISS. Keep it simple, stupid. Keep it simple. And that doesn't just go for trading strategies and analysis and trade ideas and management strategies and all that. Okay, all that's fine. But your psychology and your lifestyle need to be as simple as they can be. And if you can make your psychology simple, typically that's a function of having all of your priorities in order and not having any conflicts or anything outside of your trading impacting your trading. I will say that's probably one of the number one detractors from every trader that comes into the market and gets washed out. It's psychology. It's not understanding really what this is. And we tried to shed a little light on that Friday. So thanks for joining me. I got a lot of great feedback on that stream. Monday Psychology, it's easy. Trade to the positive. We don't go into a hole. We don't dig a big hole today. We're game planning for the week ahead. There's a lot of trades in front of us. There's a lot of hours in the market. There's a lot of key events this week. Huge events this week. Absolutely going to be a great week to trade. A lot of volatility, a lot of action. We're going to be digging in and we're going to trade it all. We're going to focus on our analytics. We got to know when our key events are. I'm going to show you that right now. And then we're going to talk about some key levels for some markets that we have to be watching. We already covered the Euro USD. We got one more idea with the Euro USD that we need to be very, very cognizant of because it could be a definite big deal. And I think it could happen later this week. I really do. You're also going to say, what do we need to do today to make it a success? Generate momentum. Let's get it going. Let's get the party started. Let's get, even if that's taking a few small profits here, just to get a little bit of green in your pocket to get ready to trade tomorrow. That's a great strategy. I like that. The big thing we cannot do, though, is we cannot go into a big-time hole on a Monday. It won't work. And the reason why it won't work, listen, sometimes you're going to lose. And that's great, but I'm talking about a big hole. I'm talking about, if you come in with maybe a 5% of your account balance that you're going to lose on a given session, or 10%, or whatever your risk loss, or your risk allocation may be, and you lose twice or three times that, that's what I'm talking about. I'm talking about shooting yourself in the foot for the rest of the week and the rest of the month. Don't do that on a Monday. It makes it really hard to show up for work on Tuesday, Wednesday, Thursday when you're already saying, well, if I trade perfectly, I'll get out of this hole by Friday. What's the point? We're here to make money. We're not here just to dig out of holes. So we've got to understand that. Get the momentum going. Get it going in the right direction, and you're going to find yourself in a much better place by Friday. Okay, week 30. It's actually week 31, so ignore that. I didn't update it. Mondays, tariffs. Tariff talk is what is dictating everything today. We talked a little bit about that U.S.-EU trade deal. We're going to talk a little bit about some tariffs, some announcements that came out of Trump earlier today as well. Tuesday, CB consumer confidence. Not typically a big number. This one's going to be important because some of us believe that we're heading into a recession. Now, I don't know. I was on the fence. I called a recession. I was calling for recession back in May, and I was everybody was laughing at me. I got yelled at by a couple folks in the live chat. That's fine. I don't mind. Yell all you want. But our GDP numbers are going to come out Wednesday. And a big function of your GDP is consumer confidence. As soon as consumers don't have any more confidence, they don't spend money. Why don't they spend money? Because they don't know what it's going to be like next month, and they got to save that money because they're scared, and that's human nature. That goes back to our psychology. Are we scared? Well, when the public gets scared, you see the spending really dry up. And if you're a consumer-based economy like the United States that depends on spending and credit and leverage, consumer confidence is among the most important thing out there. So these are going to gain more and more importance. I'm watching consumer confidence closely tomorrow. We'll cover all the action on our live stream tomorrow as well. Wednesday, GDP, BOC interest rate decision. Huge day. We're gonna have we're gonna have FOMC live for you on Wednesday. I'm excited. This is going to be probably the biggest meeting. I'm not just being a hype guy today either. I'm not just trying to hype you, it's going to be the hugest week ever. No, really. This is a big one. I mean, this was a big one. GDP Wednesday's huge. We're going to immediately on that GDP release during the pre-market, we're going to start talking about potentially recession. Now, this is a preliminary figure for Q2. But if it comes in negative, you're going to see the R word sprayed from here all around the world. That's going to be the news cycle. Now, is it going to be negative? I don't know. Maybe not. We're going to preview that tomorrow. BOC, Bank of Canada, also is going to spring into action. Really a hot U.S.-Canada trade war heating up. Big time ramifications on the interest rate front, both out of the BOC and the Fed. And then the Fed will have FOMC live for you here 10 minutes before the release. And that's going to be 10 minutes before Jay Powell's presser. At that time, we will cover the release and the key markets, and we'll trade it live. We'll get in there with a 9 EMA, maybe with some RSI. We'll work some Fibonacci's and do some live trading there. I mean, a really highly volatile time to be in the market. And I'll also critique Jay Powell and everything he says and probably make a few jokes at his expense. Don't worry, he can afford them. Thursday, PCE price index. That's going to be another big number. That's an inflationary metric. That's the one the Fed leans on to determine if inflation and prices are back where they need to be. So we're going to be watching the PCE price index as well on Thursday. And then Friday, we're topping this thing off with Friday, U.S. non-farm payrolls. I'll be on at 6:20 a.m. 6:20 a.m. Mountain Time, 8:20 a.m. Eastern. 10 minutes before NFP, we'll be live with NFP Live, and we'll go over all the key numbers, what it means. We'll talk Fed. We'll talk really all the trading levels, everything you need to know about how to trade NFP. We're going to do that. I'll be on 10 minutes before the release, and we'll watch it live. So this is a big week. I mean, I'm going to be, all honesty, by Friday afternoon, I'm going to be exhausted. That's just the way it is. But I got some rest over the weekend. I feel pretty good about it. I think I'm ready to roll, and I think you guys are ready to roll too. So we're going to do some good work this week. Very excited. As far as economic news for today, nothing. Really nothing. About the only thing we had was some bond auctions. You can see right there the 2-year note, U.S. Treasuries. The 2-year note is up a little bit, so we're sort of expecting the long-term lenders maybe aren't expecting as many rate cuts as they thought. And right now, that's what it's all about. It's rate cuts and how fast the Fed's going to lower rates. 6-month T-bill auction came in at 4.120. That's up week over week. So the 6-month is interesting. That 2-year note, though, that's up significantly from last week. Keep a close eye on some of these debt markets because they are showing signs that maybe we're not going to get the rate cuts that we think we're going to get. Right here, this is the only real chart for the CME FedWatch I care about, and it's September. Now, 97% chance on Wednesday they're going to hold interest rates firm. That's exactly what's going to happen. Any other deviation, if there's a rate cut, it's going to send the markets just in a tailspin. But right now, we believe that you're going to see rates are going to be held static on Wednesday, and then the first rate cut's going to be coming in September. That's only about a 65-35 chance. That's not very much. So I think it's still a crapshoot whether you get any rate cuts at all this year, and I will be surprised. It's the old thing. I want to see it, and then I'll believe it. I want to see it from Jay Powell and the Fed, then I'll believe it. Is it a good idea to cut interest rates? I don't necessarily know. I don't believe it, but a lot of folks want the rate cut, so we'll see what happens. Right here, Euro USD. One last thing I want to say about this pair, and then we're going to get on with the show. We got Great Britain Pound USD, and then also we're going to look at some U.S. oil and gold, of course. I know most of you are trading gold, so we've got to talk gold. But this right here it is. What do you got? 920 EMA crossover. 920 EMA crossover. There's your 9, there's your 20, and what's happening? We're starting to see the 9 come down over the top of the 20. You've got sort of an interesting situation right there, sort of the monthly low, and then an opportunity maybe to wash out that spike low. And if that is the case, then we may be going much, much lower. I'm watching for this crossover closely. We're going to monitor that one in real time, definitely over the next 36 hours. But that dump right there, that dump in the Euro USD really changed the dynamic of things. Now, as far as what we have going in other markets, I've already got our Euro USD nailed. We did have a question on the Great Britain Pound USD. I'm going to cover if you have any other markets you want to look at today, just throw them in the live chat, either on the YouTube chat or in the How to Trade chat, and I'll be sure to go ahead and line them up for you. I have no problem doing the analytics. We can certainly show our work and show you the math behind what we think. This is going to be our pick of the week. I'm going to have that out. You're going to have a video out and a write-up out with our Switch Markets newsletter. Our pick of the week is going to be coming out for the Tuesday session, but I can already tell you it's going to be gold. I'm watching gold closely, and what we saw is really an incredibly tight market. Now, I've sort of shown you guys exactly what's happening in the gold market on the monthly time frame, and I've caught some static for it. Not everybody believes this type of analysis is even remotely worthless, or it has any sort of worth or is worthless. Essentially, for me, I've been doing analytics for so long. I had a user or a viewer chime in and said, Shane, I thought you were like 35. I'm shocked to hear you were around in the 80s. Yeah, I was around in the 80s. I was born in 1979, so I'm 46 years old. I try to get into the gym, try to eat right and get some sleep. So hopefully look a little bit younger than that. But I've been around. I've been around, I've been around a little bit. And I can tell you that the long-term analytics and the long-term technical analysis is a lot more, I call it precious. I mean, it's worth a lot more than your short-term stuff. Now, we trade short-term time frames, no question about it. But if we know what's going on the other time frames, we have an ability to really sink our teeth into some key levels and understand what's going on in this market in a macro sense. There is no question that this has been the uptrend of the century. There's no question. I mean, going back to December of 2023, when this thing really kicked off, we had a leg up here, but we really just sort of ground around in 2022, came back, and then we got our big break. And then we broke, and then 2024 came on, and it's just been all bullish ever since. So for the last, 18 months or so, this has been an epic bullish trend. Well, you've got a nice big run up here. Here was sort of our pullback and our compression back in December of 2024, and then this year it just broke out again to the top side. So the reason why it broke out, why gold broke out, number one was geopolitical uncertainty. Certainly, when you have wars on multiple fronts, and there's a lot of folks out there saying, okay, we're World War III. All of a sudden, we're talking about World War III and tactical nuclear weapons. Yeah, people are going to buy gold. Investors are going to buy gold. That's just part of life. Now, the other facet of this is the dollar getting smoked. I mean, absolutely smoked this year. It's getting crushed. I mean, the dollar index is down at 98.59, 98.60, and it's up 1% today. These are low levels. So the dollar's down. Uncertainty's up, and then on the trade front, the tariffs, everything. A lot of investors just said, screw it, I'm buying gold, and I'm not going to worry about it. It was a good move, but we're at a turning point now. The last 90 days have been incredibly tight on the gold market. Now, if I've said it once, I've said it a million times. The key level in this market's 3,500 or 3,500 even. Don't get it twisted. That all-time high right up around 35.10, and that's not exact, but it's right there on that spike. That's the key level. So if you're trading gold, it's very important that you understand what's going on from a macro sense so we can trade it in the micro sense. That's a bullish pennant if I've ever seen one on the monthly chart. Now, this suggests one of two things. It either suggests eventually we're going to get that breakout over 3,500 and then we're going to roll the 4,000 roll. That's definitely possible. Or we could see a reversal from this area. This could be just sort of a stalemate and then the sellers finally win. For me, I don't want to buy right now. I don't want to buy from this level. I don't like it. What I want to see is I want to see a nice big retracement. And this retracement is going to be very simple. Spike low to a spike high. This was a beautiful trade. This was one of the best ones that we've handed out all year. That right there back in May. Boom. We went right down to 38% and we just jammed. We jammed north by a couple of $100. It was a great trade. It was a great trade. There was no draw involved. What do we want to do? I want to do it again. I want to see exactly what happens this month. If we do wash out beneath July's low, or June's low, we wash out beneath June's low, then we're going to have a chance potentially to bid this again. I would love to bid that. I would love to bid 2,900. It would be great. 13-month EMA is right there on gold. Those are great levels down there. I have no problem risking significant money from those zones. The only question I have is, A, when can we do it? And B, are we going to get a chance to do it? I think it's possible. Remember, Friday's the first trading day of August, and you've got a very, very tight compression pattern here on the monthly. We could definitely be looking at – I'm looking at my chops waiting to buy those dips. But for right this minute, I don't want to do much of anything. And it's not because I'm lazy. Far from it. There's your daily. According to what I like to do Fibonacci-wise, maybe a real tight scalp right here, 4-day losing streak, something like that. You got a 13-day EMA right up there, right around 35.55. Could be a pretty good sell. May not be a bad sell at all. So we're going to be watching that level closely, but I don't like it as much as those macro levels. Pretty darn good trade there, though. If you do get a shot at 33.55, I don't know that we're going to get that. I think that we could get it based on our news cycle and just how much news is coming our way this week. But as far as gold goes, this thing's flat. I mean, I don't know if you guys saw the old movie Office Space, but there's a scene in there where one of the lead characters, and if you haven't seen the movie, don't worry about it, but he's telling his bosses, they're asking him why he's not working harder, and he goes, it's not that I'm lazy, it's that I just don't care. I look at the gold market on the monthly, and I know what has to happen for me to get interested. I got to see it break. It has to break one way or the other. So it's not that I'm lazy and I don't want to get in there and try to slug it out with the gold market. It's that I just don't care yet. So it's got to make me care. This chart has to make me care. And as soon as it does, then we're going to be there with stacks of $100 bills looking to get in. But for right now, I don't like it. I think it's choppy. You can take the retracement on the daily. You could take this trade, and I would probably sign off on it. If you were working a trade desk for me and came and said, Shane, I like this zone. I like this area. Let's go ahead and try to sell pullbacks. I would sign off on your trade. I'd say, okay, go for it. See what happens. But don't wait around. If you see a big-time rally or something breaks and it freight trains 38%, get out. Don't wait around. Don't take a position here because this market is it's not bearish. It's flat, but it's not bearish. Long-term macros say it's bullish. I don't want to get caught. I don't want to get caught in a huge short position against gold, especially if something happens in Russia-Ukraine, peace deals fall through, new tariffs are announced, whatever. I don't want to get caught short gold. Just my opinion. That's for sure. Let me see. Yes, sir. A little peek at the U.S. dollar, Japanese yen. Absolutely. 1979. Lewis, 1979. All right. A 70s baby. There's not many of us left. Nah, there's a whole bunch of us left, but most don't admit it. Let me see. Small Yeezy. Good to see you, Small Yeezy. David the Holy One. David, how you doing? At what time do you trade? I typically trade from about 6 a.m. my time till about 9:30 or 10 a.m. my time. So that would be about 8 a.m. Eastern to about noon Eastern. Somewhere right in there. Typically, I'm done trading, at least futures. I'm done trading by the time we come on the air here during the mid-session. Definitely, and a lot of times, guys, it's no more than 30 seconds in the market. Just if I get into a position where I hit a couple quick scalps or a couple levels come my way, I'm out. And then other days, you don't get any trades at all. We had a week, 3 weeks ago, I only had like 2 trades the whole week, which is, that's boring. There's boring and then there's boring. And when it gets to be that boring, I recommend going on vacation. Go do something else. So yeah, usually about, I don't know, 8 a.m. till about noon Eastern, that 4-hour block. I find that you don't really need to do much more than that unless you're trading Forex. Forex is different. Forex, 4-hour charts, daily charts, things like that. Then you can really trade 24 hours a day because your stop losses are big enough to allow for the flat markets and things. So something like that. Let me see. Ahmed, I love February also, but sometimes I feel missing some because I mostly use daily. Should I go for 4 hours, 1 hour? Yeah, or fibs, excuse me. Ahmed, if you wanted to go for a 4-hour chart, I like the 4-hour. I like it for gold. I like it for Forex especially. But for me, I mean, if I'm looking at my dailies with this kind of range, and then you're looking at your 4 hours, you can always build trades. I mean, on any time frame you can. Just remember, the shorter the time frame, the more losers you're going to have and the more chop you're going to run into. I like the 4-hour chart. I think it's fantastic. I like the daily chart. That's pretty good as well. I mean, you could have sold right up there at 33.18 and got a pretty darn good trade out of it. But for right this minute, I'm going to go ahead and stick to my dailies at least. Do we get a bounce back up there? Probably not. But we may get an opportunity to sell this 38% if we fall off a little bit more. So that's what I would say. Time frames. I love the 30-minute time frame on the U.S. Markets, the U.S. indices. This is really a good look at what we were talking about. Key level 45,000 here in the Dow 30. We sold that. I'm not going to rehash that trade idea. We've talked about that several times. But do look at what happened today. Take a good look at it. Gap up on the open. Why do you think it gapped higher? U.S.-EU trade deal. Boom, 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 and then the sellers came in and just buried it. So I would be trading 30-minute charts during the U.S. session. Hope that helps, David. All right, guys, we had a Great Britain pound USD. I think Bobby Bob asked for this one a little bit ago, and then we'll go with the Japanese yen, and then we'll close with crude oil. If there's any other markets, just be sure to throw them in the live chat. I'm more than happy to do it. As far as the 4-hour chart goes, you can see all of our analytics there from a while back. I mean, looks a lot like that gold market, doesn't it? U.S. dollar making a bit of a move against these majors. For right this minute, I wouldn't be really too worried about selling pullbacks. I would have to see something really set up on the daily here, and we just don't have it just yet. However, we do have a couple of key levels, and when you've been in the market as long as I have, you see them immediately. You guys should have seen that immediately as well. Right there, what do you got? You got a spike low down there at June 23rd, and then you got another spike low down there at July 16th. So what does all that mean? It means you have a double bottom. You've got a double bottom, and we are at that range right now. So do we take the trade? Do we buy right now? 133.71. We've got a double bottom right there. Let's step back to our weeklies and see exactly what we're dealing with. Double bottom on the weekly. I am curious, though. Let's go back to a monthly here. I want to see if there's a Fibonacci there. Okay, there isn't. I can already tell you that. Swing low down there. That's your basis of your monthly waves. This is good stuff right down there, 131.41. Definitely write that one down for the week. But for right this minute, what should we be thinking about? Key levels. What's last month's low? Last month's low is right there at 133.70. What are we printing right now? 133.72. What's the low? 133.65. So if I wanted to take a long against the trend right now, what could I do? It's tough. You could buy based on that double bottom right there and bet on a failed auction and try to get rotation back up into these weekly ranges. You could do it. I'm not going to say that you can't. Low right there, 133.70. Low right there, 133.65. And now we're going right down there to 133.70. So what do we want to do here? For me, I would think it's more of a challenge to take this long, especially with the U.S. dollar making a move. You got the Fed this week. You got a lot of economic events. I would probably steer clear of just trying to buy this thing at the bottom of today's range. I would wait. I really would wait. And the reason why is because this area right here, last month's low, if we trade beneath that, we aren't there yet. I thought we were. I must have misread the other chart. But the low right there is 133.65. We're at 133.71. I mean, if you wanted to do it, you could buy right now and just stop yourself out beneath last month's low. The problem is if you do take out that double bottom, typically we don't just go a little ways. We go a long ways. So for me, I'm happy on the sidelines, guys. I mean, I know you're aggressive, a lot of aggressive traders in here. I'd probably be waiting. It's only another 200 to 200 pips before we could potentially get involved down here. I have a lot of confidence in that 38% level, a lot of it. Do we get that before the Fed? No, probably not. Do we get it before NFP? Maybe, but I doubt it. We're probably going to end up getting that sometime in early August. But if we do get it, I mean, it could be really just a fantastic trade. So I'm right there. I mean, I'm at 130, 155s, all day long with my bids. But that's 200 pips down the queue. Right this minute, what do you want to do with it? Nothing, I don't think. We already really missed the move. We already sort of missed the move, and that's a real challenge for us when we step up to the plate and we're late. I mean, that's really hard. Let's go ahead and take a look at let's take another approach to this besides Fibonacci's. Let's go ahead and pull up our 920 because I do have a question about exactly what that Great Britain Pound USD looks like on the 920. And if I can find it, we'll be in business. Coded 920, there it is. See where we're looking at the CAC 40 here. Interesting. Okay, so we don't have a crossover just yet. Yet a cross under right here, this is a daily chart. That's big for me because right there was your sell, and then you retraced up against it. Now you're coming off in a big, big way. You're sweeping low beneath that little trough there. This is serious. I mean, you probably want to be short, at least until that Fibonacci level I gave you. But I think it's really, really challenging to trade this, at least at this juncture, because we really have missed it. Let's go to a 4-hour. The 4 hour is basically the same as the daily. There was your sell. Bang, bang. You actually had two pretty good trades. A bid back there on the 25th. Nice rally. And then you came off. There's your cross under, and it's all over. I mean, it really was a solid trade. You even had confirmation with the RSI. We'll talk more about that later this week. But nice big trade. Nice bearish break. A lot going on there with the Great Britain Pound USD. All right, let's see. Yes, sir. Do you think the market will coil up Wednesday or Thursday due to the upcoming NFP Friday? I think that we're in for some real stuff. As far as what we potentially could talk about for price action with our key events this week, the first thing that I would say is you're going to see a little action on consumer confidence tomorrow. May not be a lot, but I expect the market to do something tomorrow. Now, we all pretty much know that the Fed's not going to move interest rates. It's going to be all about Jay Powell's demeanor at that presser. That's going to be big. I don't think the markets do anything on Wednesday. That's just me, though. I don't know for sure, and we can't project on what's going to happen. But I'm very skeptical of any moves on Wednesday. Thursday, coming out of that Fed meeting, I think you're going to see more action on Thursday, and I think probably significant action Thursday. So I don't think it's going to coil up ahead of NFP, and then NFP, we're liable to have a big range day on Friday after the jobs report. I think there's a lot at stake here, guys. There's a lot of people talking, and I think that we're going to be in for a real light show later this week. But I don't think it's Wednesday. I think we're going to have a good range tomorrow. We don't have anything going on right now in the U.S. equities. Nice trend days in the forex pairs. That's good. Tomorrow, probably going to be a decent trading day. Wednesday, I could see it being absolutely just disgusting with all the news out. Thursday's going to be better, though. Thursday's going to be pretty good. Friday, I always like to see NFP because it brings action. So Friday's going to be pretty good as well. I hope that answers, yes, sir, but really tough to make that prediction. Okay, guys, let's go ahead. U.S. dollar, Japanese yen. Now let's start off with some Fibonacci's. I'll sort of give you my take on it, and then we can take a look at some of those other strategies. The big thing we have here is we've broken above my moving average. I'm a big fan of my 13-period. My 13-period EMA is a big deal. That's why we're buying it in the euro. But you see what's going on right here. What finally happened? We broke above that key zone. So this is what I call non-committal area, the Bollinger midpoint and your 13-period EMA. The reason why I call that non-committal is because price action oftentimes gets very choppy around the midpoint of your Bollinger bands. And the reason why is because buyers and sellers are just knocking heads. And that makes it really difficult to see. We almost need to see the market break one way or the other, and then we can get in and we can trade it. So what I got going right here is a little bit of a bullish break. We pulled back down. We bounced off of that EMA. It was a great trade. I mean, we could go ahead and pull this up with some Fibonacci's too if you'd like, but you could definitely see what happened. 50% bang. Pretty good trade. Are we bullish right now? Yeah, pretty bullish. Broke above the moving average, and now we're sort of on the top side of price action, what I call the top side of price action. What I would be looking at right now is that 150 area. Be cognizant of that. That's very important. Let's go down to a daily. If you're a smart money concept trader, an ICT trader, and there's a lot of you out there, you'd probably be looking at those liquidity sweeps right there. And that's what it is. It basically is a stop hunt. What's the high right there? 149.18. They ran people over 149, then the seller stepped in, and now we're making another run at it. I mean, my top side target, if I was holding longs, would be 150, something like that. From here, that's doable, 150 pips. Well, how do you want to trade it right now? Liable to run into a little bit of trouble right there, but I don't think it's a full-blown sell. Let's go to a 4-hour chart. Really hard to trade it for me. Really hard. I mean, spike low there. You sort of saw the big run up today, and now you're just sort of fizzling. Shane, which way do you want to be? I would rather be long than short, of course. Nice big trend here on the 4-hour, and then you've got still 150 up here. Sort of got an order block. This zone right in here could be contentious, but there's really no validity to it other than it's just a liquidity sweep up at 149. I imagine that if you take that out, you're going to go to 150, somewhere up in there. But for right this minute, I wouldn't be in any hurry to dive into the market. Wouldn't be in any hurry to do it. So that's sort of where I come out. As far as, some of our other ones, our 920, you can see right there on the 4-hour chart, had just an absolutely magnificent buy that developed back on the 24th, which was Thursday, last Thursday. There it was. There was your bid, there was your pullback, and now you're just rocking up here. And we talked a lot about what your profit targets could be, and that would be the top of your liquidity sweep. Somewhere right up in here, maybe 149-ish. Something like that. Or if you wanted to be a hero and just sort of gut it out for another 100 pips, then you would be looking for 150. Just a key number, big key number up there. Not too bad of an area. Your stop loss, from here, I would get this question, Shane, where should my stop loss be? Originally, on this trade, it would have to be beneath this swing low down here. But now, you've already made the move. You can move it here, right beneath your trigger bar. I like that location. If this market reverses down into here, you're probably going to lose anyways, and that gives you a lot. I mean, that gives you a lot of chance to work. 146.76. I mean, you've got 170 pips. If the market does reverse in your face, it's going to be a significant one, and that will probably end up taking you out, even that swing low. So, do I want to buy right now? No. Is the buy gone? Yeah. If you're already long, great. 150. Do I want to short? No. I don't want to short. I don't want to play against the dollar, especially with the yen right now. I'm a little bit skeptical about it. All right, let me see. U.S. oil and BTC, and then we're going to go ahead and call it. Bitcoin's been one of our pets. It was one of our better calls in a long, long time. You see right there on the 27th of July, which would have been yesterday, you saw exactly where the price went right up to 119,826, and now we're sort of coming down. You had a bid signal right there, which was a good one. Got you about $1,000. Now we're on the other side of that. Now we're starting to see this market come down. A cross under is definitely in play for this 4-hour chart on Bitcoin. Do we want to trade a 4-hour chart on Bitcoin? Maybe, maybe not. Let's go back to our daily. I like the dailies on the cash market. I think they're pretty solid. You see right back here was our buy signal on the 920, and that was back somewhere right around 107. That was a great trade. So what's happened though? Just before we switch gears to some Fibonacci's. Big run towards 125. Now you're just chopping sideways. Why? Because the market's indecisive. You're having a fight between buyers and sellers. People really don't know what to do from this level. And that's okay. You don't have to know what to do from every level. That's for sure. But what I would be very cognizant of right now is not getting caught short. You need a good reason to go short. Now, if this daily chart, if this 9 EMA crosses under the 20 EMA, yeah, you probably would be wanting to short that for the intermediate term. Maybe look to grab 5 or 6 grand on the trade. This, though, right here, this looks to me like we're building momentum potentially to go higher. So let's back up to a weekly. I mean, it's a pennant. It's an ugly pennant, but it's a pennant. Right there, what did you got? Boom. Nice big run-up. That's the run-up sort of that 920 showed us. And then what do you have? This isn't so much of a pennant as it is a bullish flag, something like that. There's nothing wrong with that. Interesting dynamic. There's your run-up. There's your breakout run. Then a pullback, and now you solidified, and now you're pulling back into this range. I'm bullish. I still want to be bullish. So if I was trading right here on a weekly, something like this, I want to respect market state, which still is a sort of it's not really a trend much anymore. I mean, we flattened out the last 2 weeks, but we've got some good Fibonacci's. Got some good Fibonacci's in play, 113.6, maybe 113.750. That could be very good down there. A pullback bid to get long, that could be very good. So that's how I would be playing the Bitcoin right now. If I was holding, Shane, what do you want to do? Buy it or sell it from this level? Boy, I want to be long, but I don't want to be long from right here. Wait, be patient. Wait for that pullback and get that pullback. Long is the right way to be with crypto right now. There's no question about it. The only question is where can you get the most bang for your buck? And that's going to have to be on a deeper pullback. All right, let's see. One more. We're going to go U.S. oil here. Let's pull up our MT5 platform here. I'm on Switch. Now, remember, if you're going to trade U.S. oil, the WTI contract on Switch markets, you're going to have to use that WTI CFD, which is right here. Now, the pricing is going to be different. The market dynamics is the same. This is what I talked about last week. Really, this range that came across the board, sort of late June. Nice big sell-off, and we sort of chopped sideways, and now we're just rotating around, especially, what are we, right on that 20-period EMA? So I'm not interested in selling this at all until we get a good break up right up in here. I'm going to show you the trade that we did hit last week in U.S. oil, but for this WTI contract, you've got really a ripe sell up there at 70. Right now we're printing about 67. We're going to have some big news out later this week. We've got EIA numbers. We've also got the interest rate decisions, which will dictate policy in WTI crude. So for me, if I was going to pick one level to focus on this week, it would be a sell from right up under 70, 69, probably 75, something like that, 69, 75-ish. That's a great level and one that you could really sink your teeth into with some basic analysis here. I mean, this is it, guys. Huge plunge, washed out that low the next day, and since then, we've just been chopping sideways. We challenged 70 right there. If we challenge it again, it's going to be a pretty good sell. Right now, price is in a state of equilibrium. We need it to get out of that equilibrium so we can step up and sell it. All right, let's take a look at U.S. oil here. It's going to be a different set of numbers, same basic, really the same basic type of thing. I went here on the weekly. Say, Shane, your analysis is different. I'd say, no, not really. No, not really. This was sort of the trade idea that we put out last week for U.S. oil, and it's basic, very basic. So what was it? It was a sell from 66.60. We covered this on a live stream as well. Let's go to our daily. What did you get right there? Absolutely beautiful. Friday, what was your high Friday? 66.70. It's fantastic, guys. I mean, that's exactly what we were looking for. We were looking for price to go up right there. Boom. 66.70, and that was the top of the session. That was a great trade. If you got that one, fantastic. Now, today was a little different, wasn't it? You went up and you rushed hard, 67.02. What do you think? Why do you think that big bullish rush? Look at the volume. A lot of volume right there. That's when crude oil starts trading about 9 a.m. Eastern. Crude oil futures, that's when the volume comes into the market. Why did you get that run right there? Trade deal. $750 billion committed from the EU to buy U.S. energy. Is some of that oil? Yeah, most of it's natural gas, but some of it's oil. Fascinating stuff. Fascinating stuff. Absolutely great level there to trade. So if you're on U.S. oil, though, and I was saying, okay, what do I want to do for this week? It's going to be the same analytics that we just went across, that we just went over on the WTI CFD. Something like this. 68.99. You'll notice the numbers are a little bit different. That's okay. That's just because the assets are priced different, but you'll see that the market structure is very much the same. It's just your entry levels are a little bit different. That's all. 68.99. So yeah, I'd be setting up shop somewhere right around 68, probably 75, 74. That would be a pretty good trade. That's not a bad one. Same basic analytics. You can see that this level has been absolutely fantastic. Is there anything out there that can send crude oil definitively higher now? Of course. War. Absolutely. Lower interest rates will do it too, but we're going into the fall seasonality. This is still a bearish type of a setup. If we do wash out maybe that 64 zone, we're not just going a little bit lower, we're going a lot lower. So I'm watching crude oil closely. It's been boring though, guys. It's been like pulling teeth trading WTI crude for the last month or so. It's been ugly. It hasn't been any fun at all. I've been trading, most of my time has been spent on gold. All right, everybody, that's a wrap for me. We didn't really even get into the tariffs. I guess I could cover that real quick, but we've been going quite a while now. You can see global baseline tariff will likely be 15 to 20%. That's a big statement out of Trump. Nobody was really expecting that. But basically, if you read the article, he's tired of trying to cut deals with 200 countries, and they're just going to go ahead and throw a baseline tariff on them and see exactly how that goes. As far as, courts, what can they really do to do trade deals and tariffs? They can't really do anything to stop them. Just be trying to essentially buy time until the U.S. midterm elections. U.S.-EU trade deal impacts America's imports overall. You've got Trump and Epstein. That's been the news here for like the last 2 weeks. What you're having is you've got a lot of things going on, and they pretty much all revolve around the Epstein scandal. But this one right here is a big one. Trump gives Russia less than 2 weeks to reach a peace deal with the Ukraine. What do you have? $750 billion in energy assets going to the EU. That's one pressure. That's one form of financial pressure being put on Russia. 2 weeks to sign a peace deal. The rest, there's going to be big tariffs, and there's going to be big trade restrictions that go back down on Russia. And, I'm just going to be honest with you. I'm not really a partisan political talking head or a hack, but the administration that they have in there now, it's not going to be as simple as just putting currency controls on Russia like the Biden administration did that did not work. It actually made Russia stronger, made the ruble stronger after the initial shock wore off. They're not going to do that. They are going to go after, and if you read the article, the tariffs and the trade restrictions are going to go on countries, anyone that does business with Russia. And Trump will do it. The last administration wouldn't do that. So anybody that's in business with Russia is also going to go under huge tariffs. And who's that going to be? It's going to be China. So that's a potential powder keg. I'm going to cover that more as we get closer to it, because I've been telling you the tariff news is sort of overblown now. That one could move the markets. I mean, if they come through and say, okay, you don't have a peace deal, I'm going to put 50% tariffs on everybody that you do business with, 100% tariffs. China, that's the big one. So that's going to be an additional tariff on top of the already existing tariffs. Nobody in economics school knows what that's going to do. Traders don't. We have an idea. We're just not sure. All right, guys, I went way long. I went almost an hour today. Well, we had a lot to talk about. Get this week off on the right foot. Tomorrow we're going to do a workshop, trading workshop, improving your orb entries. At that juncture, we're going to talk about the CB Consumer Confidence Index, and we're also going to talk about the video we just made. I don't think that one's going to come out tomorrow, but maybe later this week. It's going to show you how to improve your orb entries. It's imperative that you guys make the most of your trading dollar. This is the time of year where you're not getting many breakouts. You're not getting many orb breakouts, so you've got to make your entries as good as they can be. All right, everybody, thank you for joining me today. Good to see a lot of new faces, a lot of new shout-outs. I'm in the How to Trade trading room, so I love to hear from each and every one of you. Feel free to send me a message anytime you like. I'll get back to you as soon as I can. Absolutely, Lewis, my pleasure. Bobby Bob, my pleasure. Steve Francis, always good, guys. You guys have a fantastic trading session. If you have any questions, head on over to howtotrade.com. Send me a private message, and I'll be sure to answer. Till then, trade the action well, and we'll talk soon. See ya.